Good morning, everybody. Welcome. We will start in just a minute. Let's wait for 1 second to see that we get more of you in. If you want, you can introduce yourself in the chat. Let everybody know where you're joining from this morning and what are your expectations for the session. But all right, my clock says it's 8:30, so it's time to begin. Warm welcome to our webinar, The Planetary Portfolio, Investing Within the Planetary Boundaries. My name is Annina Huhtala, and I will be moderating our session today. We will dive into impact investments and how to invest in a way that it takes environmental pressures into account. I had a huge pleasure earlier this spring to help the team at Security Trading to package this new science-based investor tool into a playbook and a spreadsheet. And we launched those just a few weeks ago. In case you have not explored them yet, we will be sharing them in the chat very soon. Our agenda will be quite short and sweet. Anna Herlin, Vice Chair at Security Trading, will kick things off by explaining the reasoning and the motivation for creating a new tool for measuring the environmental pressures of investment portfolios. Why would a family office dive into such an endeavor? And after Anna, Georgi Agiashvili, investment analyst at Security Trading, will give a little demo and show us how to use the tool in practice with a real portfolio. And then we will wrap things up in a Q&A where you have a chance to ask questions from Anna and Georgi. And you can type your questions in the chat throughout the webinar, and our technical aide, Outi, if you can open your camera for a second and wave your hand. Hi. So Outi will be picking them for the Q&A part. And I need to say that Outi Helenius is a person of many talents. Usually she works as the investment director at Security Trading, but today she'll be our chat master. So abundant expertise at your disposal in the chat too. But yeah.
And just to let you know, we have at the moment some challenges with the chat, but we will be solving them out. So just wait a couple of more minutes to get your questions in. Thanks.
Okay, thank you, Outi. Yes, I'm sure we'll get that solved. But while that problem is being sorted, how about we dive into the topic? So Anna, may I welcome you on our virtual stage? Hello, it is early. So let's begin with a simple question. Why are we here? Are you not a family office, not a think tank or an asset manager?
Exactly. Thanks, Annina, and thanks everyone for joining this. Well, early or late depends on where you're calling in from. Why are we here? Are we not a family office and not some kind of a service providing company? Indeed. So the primary job of Security Trading is to be the best owner for Kone and guarantee the long-term success of this elevator and escalator company that's been held by the family for now more than 100 years. And we are a small team looking after our Kone ownership and then the portfolio of mostly listed equities around it. But in the past 5 to 7 years, it's kind of become brutally evident that unless we all direct a big part of our ambition towards also battling the ecological crisis, we have no business saying that we are actually doing our best to protect our business. So we're here because we think that the ongoing ecological crisis it's going to be the biggest market failure and the most long-lasting. And so we're hoping to build a healthier, more resilient market instead. And we wanted to pick up this task where we did not come across any tools made by others. So then we committed first to a 6-month project to create one ourselves. And so a few weeks ago, we launched this investment framework called Investing Within the Planetary Boundaries. And we wanted to share it freely with the investor community. Georgi, who is our analyst who developed the tool, he did such a great job that we wanted to share the work for others, and really hope it helps in this kind of shared task, the big challenge we have at hand.
I think I need to pick a sentence where you just said the ongoing ecological crisis is going to be one of the biggest market failures. Can you be a bit more specific as to why security trading is talking about and focusing on the ecological crisis out of all possible topics? Why is this so important for you?
Sure, or I can try. So in 2025, the state of this planet's health and stability, and we know this from just keeping our ears open to the science, the health and stability of the planet poses the biggest and really quite catastrophic risk to all human business activities, also all human life in general. And this has actually indeed been kind of a unified message coming from thousands of scientists in the form of IPCC reports and other global stock takes for several decades already. But probably everyone online also knows this fact, but it has to be said. And also needs to be said that we as a species have been really slow to respond to a crisis that has been kind of creeping and is so intangible. And within our family, we have been privileged to be working with these topics and collaborating with the global research and conservation community for more than 10 years through our philanthropy that we have called the TAH Foundation, the Tiina and Antti Herlin Foundation. And so we've obviously become really worried. And it's kind of a motto for us, which you see also on the screen at the moment, that if you're in family business, your business is also to safeguard the future. So simple as that.
And what is the planetary boundaries framework that you base this new investment tool on? It might be that not everybody in the audience is familiar with the term. Could you maybe give us a brief intro?
Sure. I've been thinking about this and kind of hoping that maybe the school books that are now or next year being written might already have this sort of more holistic approach to what's going on at the moment. Georgi is going to soon show a little bit more slides and go a bit more into detail. So don't worry if you don't grasp everything from my brief overview, but just in general remarks, the planetary boundaries framework, it's the kind of the closest thing we have to looking at the really interconnected natural systems holistically. So holistically, instead of optimizing for just one thing, for instance, emissions, and ending up making a big mess elsewhere, for instance, biodiversity. So the framework defines a science-based, it's called a safe operating space for humanity. So a space where we can continue thriving and prevent dangerous and sort of abrupt, large-scale and irreversible environmental changes, basically. So it looks at 9 critical processes, such as climate change or pollution or the nutrient flow and human land use. And as Georgi will soon say, I'm just gonna kind of, this is good to repeat that 6 of those 9 planetary boundaries are now really substantially breached by human behavior. And then that has taken us to a sort of, on a planetary level to a course that we really need to correct. So typical symptoms that we already witnessed are the increased amount of extreme weather, which is probably also hasn't escaped anyone's attention. And there are droughts, wildfires, floods, coral bleaching, all of that follows. And the human overuse in irrigation and land use changes has also resulted in water scarcity. And then this is a growing barrier to socioeconomic progress and just a threat to livelihoods around the world. And also, actually, water scarcity is a really big cause for more and more violent conflict. And obviously, the most known symptom is just simply the planet heating up. And sorry to end with a sort of a bleak fact, but it is really that with the current trajectory that we are on, even the kind of the more conservative models predict that by 2090, more than 2 billion people would be exposed to really unprecedented, unhealthy, often really unlivable heat. So 2 billion people might be looking or needing to relocate or just live a very, very unhealthy and unjust life. And I'm thinking my kids hopefully will be around in 2090. My possible grandchildren might be my age. So this is another scenario that I'm looking forward to.
Quite a lot to digest on a Wednesday morning. But with the task this scale, how do you see we can motivate investors and companies to actively course correct the current trajectory? And are there some bright visions ahead in your mind?
Mm-hmm. Yeah, absolutely. I tend to stay optimistic, but I think we really owe it to ourselves because we're all intelligent people on top of the food chain, and I think everyone online is part of the group of people who typically use 4 times the resources of this one planet annually to kind of sustain our lifestyle. So I think we really owe it to ourselves to just kind of calmly, analytically take in the basics first, and then after that, there's countless of opportunities for action. Also self-interested action and reasons for optimism, I think too. So our species has sort of won the evolution race, or so it seems, let's see, because we have created language and we have an unforeseen capability for cooperation, and we have a superpower called imagination. So I think these 3 things mean that we really have a capability to sort of innovate things that are not yet there, and also we can say coordinated action towards a more stable and just future for us and the generations to come. So I hope that the tool that Georgi will next present serves as an example of how we can sort of all just kind of sit down and try to find a way that we can build a better future from the position that we have. And I really tend to stay optimistic when I just look at the growing global coalition that is grasping the urgency and also the opportunity. And I think especially European and Nordic business communities that today have a really kind of unique opportunity to really take the lead and be the first movers into that kind of brighter version of the future that we can have, where there are ecologically sustainable systems. So I think there's a chance for us to kind of keep this shared spaceship of ours on a safe trajectory for the next centuries too, basically.
Perfect. Thank you so much. I believe this vision provides an exciting segue, or maybe a spaceship, to the next item on our agenda, and that is the how. So we move on the why to the how. How can you use this tool that has been just launched? And before I set you free, Georgi, I'd like to remind you, dear audience, that if the chat is functioning, you can drop questions anytime, even during the next presentation or after Anna's. But now I'll let the main creator of the new framework, investing within the planetary boundaries, Georgi Agiashvili, take the stage. So Georgi, you're welcome. Go ahead, show how to best utilize the tool to understand how investments impact the planetary boundaries.
Yeah, thank you, Annina and Anna, and thanks everyone for joining on my behalf as well. To start by giving a bit of context, my background is that I've studied finance and data science, and the last few years I've worked as an ESG data analyst in asset management business. But last summer I got the opportunity to start working on this project. So how to bridge the gap between planetary boundaries, which is a scientific concept, and investing, which is not always so scientific. And to be honest, I had barely heard the term planetary boundaries before this. So I guess I did the only reasonable thing I could at that point. I started extensive Googling, and luckily I came across with a Netflix documentary, Breaking Boundaries, from 2021, which helped me to get started. Also in the summer, I found a free online course by the SDG Academy on planetary boundaries, which was instructed by the same researchers and scientists who are behind planetary boundaries framework. So that made it a lot easier for me to start reading research papers and actual scientific publications on this topic to kind of deepen my knowledge. So in a nutshell, the main idea in the planetary boundaries concept is that for the last 10,000-11,000 years, the Earth has been in a really stable condition. And this has allowed human species to settle, start farming the land, and build cities, ultimately leading to flourishing civilizations, as we know from the history books. And this was really the thing that catch my attention. While human species have been around for maybe even 100,000 years, the construction of human societies, as we understand them, was enabled by this 10,000-year period of extraordinary stability of the environment and climate. And now, unfortunately, because of human action, the Earth has started to lose its stability. And this is exactly why planetary boundaries concept was established, to indicate limits on the Earth system that would keep the Earth in a condition that would resemble this stable period we have known. So indeed, our investment framework is based on planetary boundaries, and it sets safe limits for 9 critical Earth system processes necessary to maintain stable and resilient Earth. And as Anna mentioned, the latest science indicates that 6 out of these 9 boundaries have already been breached, and it's primarily due to human activities. The boundaries at the highest risk include climate change, biosphere integrity or biodiversity loss, biogeochemical flows, meaning nitrogen and phosphorus runoffs, and novel entities, meaning pollution coming from human-produced new materials. In addition, at an increasing risk are a land system change measured by forest loss and freshwater use. Knowing these breach boundaries is crucial for understanding our investment, where our investments cause the most significant pressures. So moving on closer to the investment framework and to the corporate setting, we wanted to focus on measuring physical impacts rather than just tracking company policies. While we think that policies are important, it's really hard to evaluate their real-world viability and enforcement if you don't have specialized expertise. So yeah, that's why we wanted to understand the actual physical environmental pressures that companies make. On the other hand, it became clear that finding kind of sustainable level of resource use, which of course, when you are trying to keep up the civilized world and kind of human activities where we have grown into over the last thousands of years, you need the resource use, but having and finding the sustainable level of it is very difficult and basically always context specific. So that's why we emphasize the role of verified science-based targets together with an appropriate tracking of progress. The key here, of course, is to find a credible third-party organization to do this. And because of this, we really endorse the ambition of Science-Based Targets Network, SBTN, and their work for nature guidance for companies and cities, and also the Science Based Targets Initiative, SBTI, which has been doing the same work for climate for a bit longer. And this all leads to a core principle of the framework. For investors to have a real-world impact, companies must achieve real-world changes. And this requires companies to both measure the environmental impacts that are relevant for them and also commit to science-based environmental actions. And here with our framework, the goal is to help investors to encourage companies to do just this. So let's look at the data table we have here on the right, because I guess this is the core element of the framework. We wanted to begin with a simple, standardized, and manageable set of indicators. We ended up using indicators made available in the EU regulations, namely CSRD and SFDR. And then we made an attempt to map these indicators to the planetary boundaries. Also, for each indicator, we assign action targets that would then show that a company is being serious about its actions. So here in the table, for example, the pressures on climate change can be tracked by CO2 emissions and assessed by the SBTI targets. Freshwater change can be tracked with water consumption and followed by the SBT and freshwater targets. Novel entities, which we proxy by hazardous waste, can be linked to targets like zero waste. The sufficient company commitments and actions, which are verified by a credible third party, are really important for investors, because otherwise it would be almost impossible to know, are the companies doing enough? And once we know that company's ambition is at the right place, then of course the reporting and numbers should follow accordingly. And this is all in the Excel tool that comes with the guide. So you can find the indicators, their mapping to the planetary boundaries and different standards with short descriptions of the reasoning behind. And this table that I show here is in the mapping table worksheet if you happen to open the Excel tool. So the framework itself follows a clear flow, which is broken down into a couple of stages. And from the get-go of this project, the aim was to make this tool actually accessible and usable, even for a small investment team, say 3 people. So usable for really small teams. And we want to emphasize that the overall goal with this framework is not to optimize an investment portfolio's composition of what companies there are, simply to minimize the portfolio's environmental indicators. The goal here is rather to make sure that as many financed environmental pressures as possible are steered to stay within science-based limits. So we don't see divesting companies as the primary way to go, but instead for investors to put pressure on the companies to take action and drive change. The first stage of the flow is materiality analysis. So you start by assessing which pressures are likely the most material or significant for each company from the environmental point of view. This can be done, for example, based on the company's industry, and tools like the Anchor knowledge base can be helpful here, but there are, of course, other tools as well. And I guess no single tool will solve everything, but there are ways to get started. In the Excel, in the worksheet example portfolio again, you would then categorize each pressure as 1 if it is material and 0 if the environmental materiality is not high. Then you would need to collect environmental data across your portfolio using the key indicators that I showed previously. And as said, these figures are based on the EU regulation. So now that especially the larger companies have started to report on CSRD, you will find these figures from those reports. And also, for most part, the figures can be found in the Global Reporting Initiatives, or GRI's, reporting standards. So this link should make the tool useful for non-European companies as well. Also, since we rely on the same indicators as set out in the SFDR's principal adverse impacts, this approach should be doable for investment managers providing Article 8 and 9 products under the SFDR regulation. And finally, in this first stage, if a topic is material for a company and it isn't reporting on the indicator, that will mean that this would be your first touch point for engagement with the company. So as an investor, you could start demanding that since this topic is important, the company should start measuring the relevant indicator on this topic. Next, going into the second stage, you will have to assess environmental actions that your investee companies are taking. And in particular, you will want to label companies each environmental pressures based on third-party verified science-based commitments. So here on the snip you will see, or the screenshot, you will see how this is done in the Excel tool as well. And of course, this will then provide a second touch point for engagement. So if a company has not committed to sufficient action, this is where you know that you should actually demand that from a company that has high pressures. So basically, our expectations are aligned with science-based principles. We expect companies to first measure and report their environmental pressures, initially focusing on direct operations and going forward, aiming also for transparency across the entire value chain. Crucially, we expect companies to commit to action, setting science-based targets on climate and nature, avoiding waste, pollution, and also excessive resource use. This process or this flow can be represented as a decision tree, and it's done in the Excel in the form of if formulas if you really want to draw the decision tree kind of open for yourself. So all in all, this tool helps investors to highlight where their portfolio's environmental pressures are the highest, so that investors can prioritize their engagement activities with companies. And when talking about impact investing in listed equities, and in some cases corporate bonds, I believe that engagement with companies is the most relevant place for investors to contribute their impact additionality. In addition to direct investments, if you are investing through funds, you can use this tool as a reference when discussing and setting expectations for your investment managers. As I mentioned, the indicators we rely on are based on the SFDR. So in the European context, if the fund manager is making sustainability claims, they should be able to perform analysis described here. Finally, the framework allows you to zoom out and look at your finance planetary pressures at the portfolio level as well. And this is simply calculated by summing the product of each company's pressures and your ownership percentages. Then you can categorize these pressures based on whether the underlying companies have committed to sufficient science-based actions or not. And this would give you a visual representation showing the proportion of finance pressures covered by sufficient action, those with insufficient action, and where you have missing data. And I have to admit that the visualization here can be tricky, but I included my suggestion in the worksheet example aggregation in the Excel tool. So you can disagree with that, but that's one way to visualize. The portfolio level analysis is basically useful when tracked over time, since the idea is that following successful engagement, the goal here is to see that the proportion of financed pressures that are covered by sufficient actions will grow annually. And this increasing coverage of science-based targets should presumably lead to a decrease in negative environmental impacts. So in summary, our framework provides a systematic but relatively simple way to evaluate the planetary impacts of your investments. Here in the first version of the tool, we focused on reducing environmental pressures because that is the key principle of steering us back to the safe operating space within the planetary boundaries. There are, of course, direct investment opportunities targeting the solutions. For example, in new technologies emerging in growth companies or advancing the transformative change in bigger companies through green bonds. And while all these solutions are important, we need action in all fronts and at the same time to reduce the negative impacts on the planet. By focusing on science-based principles, key physical impact indicators, and targeted engagement, investors can leverage their influence and contribute to steering the environmental pressures that are being financed towards sustainable level. We believe this tool helps to lower the threshold for investors to start taking meaningful action. Thank you very much for your attention.
Thank you so much, Georgi. This was a quick deep dive into the tool. And now we have some time for questions and comments. I see a few of them already dropping in the chat. We all understand that these topics take a little bit of digesting, but I would like to encourage you to ask even the so-called stupid questions if those are in your mind. Both Anna and Georgi are here to respond. But let's the ones that we have here. Thanks so much. I picked the one maybe in the order. Mikael Fast says that it's great that you focus on companies with verified targets, but what happens with the rest? Those that don't report or haven't set targets yet? Do you just leave them out, or do you try to estimate the impact somehow to get a full picture?
So yeah, I guess the main point here is to help investors to find where they need to target their engagement focus. So if the company is not reporting the metrics that should be reported, then as said, that is the first thing to start discussions with the company. And then regarding the verified targets, it's really hard for investor to kind of say if a company has some targets that have not been approved by a third party, that are those targets enough. So that's why companies should be engaged by investors to set verified targets to help all the stakeholders to understand that the company's ambition is in the right place.
Then I'm moving on to the next one. Anna, you clicked your mic all open.
Yeah, no, I just wanted to there are really good questions on the chat, and from my behalf, I just wanted to generally make a comment that that we are really happy to be able to put this one out and really eager and also happy to see that similar kind of development or like people are picking up the challenge and the ambition and similar types of tools and thinking is being created also elsewhere, and especially maybe in the VCPE world as well. So definitely not answering or able to answer all your kind of demands with this first thing that's out there, but just really encouraging everyone to join us because it's fun and makes you feel hopeful.
Awesome. I'll fuse two questions. So there is a question from Jahid, and I'm sorry if I'm butchering your names, Genrik. So question about first of all, geo-scoped investment mandate. How do you think LPs who are focused on a certain geographical region can enact planetary boundaries? Surely you can act locally, but how do you ensure it has planetary effects? So this local side. And then there's another question. Do you have a particular type of investment company size in mind? And that kind of, I guess you broached that a little bit in the previous question. One of the critiques of SFRD has been that it has one size fits all approach. So yeah, a question about both geographical scope and then the size of the companies.
Yeah, so on the geographical locations, I guess if you think about planetary boundaries, the climate change is more or less the only one that's kind of globally caused and affected, but for the others, mainly the drivers are very kind of local. The implications of breaching those planetary boundaries are global, but where the pressures are happening are usually local, and that's why, for example, the Science-Based Targets Network has this approach for nature targets that the companies would start by kind of one asset by asset on the local level. So of course, if you think about investing, you always need to kind of, it will always be context specific. And regarding size, I guess the focus here is, as you mentioned, on making it also with this framework, making it also easier for investors and make use of the one size fits all. And it does make sense because kind of the pressures are, or the pressures on the planet are mostly, or the biggest pressures on the planet are mostly coming from the biggest companies. So having the simple enough understandable metrics there makes sense to focus on the bigger corporations to reduce pressures. Then usually when you talk about small companies, those are the ones that have, especially in the VC world, those are the ones that come up with great solutions and even transformative solutions. But while they are small, it's not about their pressures, it's about how they solve the issues. So maybe this tool or this framework may not work as well there.
I'll pick a next question that came from the hosts and panelists. This one is from Olga Mariasova. Thank you. From investment management perspective, can planetary boundary tool be used as a risk management tool to help identify and minimize risks company is exposed to?
Can I start? I'll just start on a kind of the high level, and then Georgi can add. I think that's kind of on point, that with the breaching of the boundaries, there's really like a big systemic risk. So especially if you're like a long-term investor or like have a time horizon of more than a couple of years, then it's definitely useful to identify which companies will have the resilience and the resources and even the opportunities to for long-term success. But maybe Georgi has something more on a level of different granularity to this question.
Yeah, there's kind of many touch points for the risk perspective, but I guess when we measure and track these physical indicators, they're kind of the most relevant there is, of course, that it's always tied to resource use, and if the companies use too much resources, there are kind of direct implications of what kind of risks there are. But in the bigger picture, as Anna mentioned, this is about systemic risk that we face kind of globally, and if you go into this kind of ESG nerdy terms, then basically we are not focusing here on financial impact, but rather on environmental impact, which does have, of course, financial implications as well.
I will make a point at this point, because we have 4 minutes left, that keep on dropping those questions. Anna and Georgi have made a promise to answer all those questions that we didn't have time. So if anything is still in your mind, go ahead, type it in, and we'll send you answers in an email. Let me pick one question, probably a shorter one. It just went through my eyes. The SBTi targets are normally separate for the scope 1 and 2 and scope 3 emissions. Does your tool take that into account?
Well, not really, but this should be taken into account. Kind of in the Excel, the Excel tool, I didn't separate those, but I mean, it's not even to that you should take into account that are the scope 1 and 2 and 3 taken into account in the SBTi targets, but it's actually that all those scopes should be addressed. And I guess if you think about the other indicators as well, I mean, in the ideal world, you would have those scope 3 water use and scope 3 land use indicators available, but I guess the measuring is not there yet. So yeah, I mean, in this kind of science-based approach, the whole value chain of pressures should be taken into account.
I will give you one really quick curveball, because you have 1 minute to answer to this one. Lauri Reuter from the chat. On the point of small startups, how would you approach evaluating the positive impact of new technologies towards the planetary boundaries?
I guess I would start by looking at what are the most pressing issues and the causes driving planetary boundary kind of pressures on planetary boundaries, and then of course you would need to compare different solutions and how big impact those different separate solutions are. I know that there have been research on this kind of scenario analysis on how different solutions would impact planetary boundaries, which is super important, interesting, and you can actually find this on the Potsdam Climate Institute's planetary healthcheck.org website. But yeah, comparing the impact of different solutions and trying to find those gaps that really need solving.
Thank you so much. Gosh, time flies when you're having good questions. This is all the time we have today. Thank you so much, everybody, for participating. We hope you learned something new, and this is just the start. So our wish is that the conversation continues. If you do adopt a tool to your own investments, please let us know how it went. We will be also sharing this recording and, as promised, answers to the questions. So yeah, huge thank you. Please share the recording to your friends and colleagues as well. And once more, I'm wishing you all a wonderful day ahead. Thank you so much.
Thank you for your time.